Another quick episode here of just pretty financial. We're just trying to help get through the noise and find the truth, find what is happening in the market, any important things we need to know about, talk about real quick, and just clear the air really. So obviously we're a day late here to the conversation of DeepSeek AI, right? Massive market sell-off, and we saw NVIDIA have its worst drop in history, number one drop of all time, over $600 billion lost, all over a cheap Chinese knockoff when it comes to a learning language model. So Twitter has been crazy, some very, very funny takes on the whole thing. But we'll zoom out real quick and just look at NVIDIA and we'll see exactly what we're talking about here. So as you can see, yesterday's drop was pretty phenomenal. Currently trading at 125 in the pre-market, so we're already up. The fear seems to be already subsided. The whales bought the dip and they've probably stocked up on NVIDIA at 118 or 117. So just be aware of that. These drops happen. What's my most important question is what's happening the next day. So NVIDIA is back on track. And for now, the fear of DeepSeek R1 is over. Long story short, they claim it cost super cheap to build this learning language model compared to OpenAI, ChatGPT, and other models. The truth is most likely they were using very expensive NVIDIA chips that they can't report or talk about. And everyone else, including Elon Musk, seems to agree that they were most likely using these chips anyway. So it's good for AI, it's good for the markets, it shows that we are moving forward. It shows that AI is in high demand and there'll be more and more learning language models that will pop up. So we're not worried about this. It's a good thing for the market, I think. We can pull this up real quick just to highlight it. It is the biggest single loss in market cap for any company. And NVIDIA tends to be the heavyweight when it comes to one-day swings to the downside, taking second place too. But we'll see the bounce. They'll buy the dip. Check out Evan. He had really, really good information on this too. And Broadcom likewise was down pretty significantly as well, 17%. Another opportunity to buy the dip. Other stocks we need to highlight real quick is our beloved SoFi had its earnings report. I want to cover this later in more detail, but long story short, they are prioritizing long-term growth investment in the future over just short-term gains, right? They don't really care about having a blowout quarter if it's not going to be long-term sustainability. So Noto was very clear with that. I think he spoke really well. Don't really care about the minor dip because as you can see, we're already up again in the pre-market. This is the year of SoFi, and we are heavily invested in SoFi and may buy more as well as time goes on. We'll just dollar cost average into SoFi. As you can see on my screen, a bunch of other relatively down days, of course. NVIDIA, Sound AI had a down day too. Big Bear. These are all companies we're kind of watching as potential high growth companies this year that have good opportunity to the upside. So it was a very good red day. Yes, a good day to buy, good day to get in, get involved, start building out positions in these companies, and we'll look for more of these opportunities as well. AMD had a good drop down as well. So if you didn't buy AMD, if you're still looking to build out your base in AMD, you now have another opportunity here in the low to mid 115s. It was pushing back up towards the higher end, of course, but there's a nice downward trend here too. Palantir is still doing what Palantir does. The dip gets bought and now it's back up to the mid to high 70s. It was as low as in the 60s, and the conversation was, oh, we're going to see Palantir crash even further, all the way down to these marks, or this mark right here. But that never happened. Palantir rallied back up again. So that dip was bought. The narrative is the dip gets bought on really good companies. Tesla likewise has had a bit of a dip down again into the 300s, but as you can see, pre-market we're already over the $400 mark too, which is right there. Oh, whoops, sorry about that. Right up here, back up over that $400 mark. So those are the ones we're watching. Apple, I have to cover Apple real quick because I have quite a significant holding of Apple. I wasn't concerned about the sell-off because I knew it was relatively overvalued here because they didn't have the technology really to back up the innovation, if you will, the high-end user demand. So I was anticipating Apple was going to have a bit of a sell-off. This was a little bit extreme, of course. This was a pretty extreme drop-off. I'm not going to lie, it kind of was a little bit concerning, but again, it's a great company. They're doing fantastically well, and we already have the increase here of a few days. Apple was the only thing that was green yesterday, so I think a lot of folks jumped into Apple to ride that wave back up. So not worried about Apple. We'll keep an eye on it for the future. They got enough cash to do them for a long time, and I think there's innovation ahead of them. They just have to figure out what is the next big play to get involved in. We'll look at the cheap stocks again real quick, and just a few highlights in here. Black Sky had a huge sell-off day, 12%. Just a lot of good opportunities to get into some real low cost growth companies that may have a big year. Black Sky, Big Bear AI, likewise, very, very choppy, but it's holding itself in the $3 range, which I think is a wonderful, wonderful sight just to see there. Other notable ones to call out maybe would be Hover. It's a cool company, and it's come down significantly there, and it could be another opportunity to buy back in. And then we'll just finish off with just one or two more real fast. APLD had a significant drop back down to the $6 range after pushing up higher into the $9 to $10 range. So this could be another huge opportunity. Do your research, of course, not financial advice. Like and follow, give us a comment. We're trying to grow, but I'm just showing you where the market is and the opportunities to build out positions. And all these companies are on sale right now, which is a wonderful chance to do your research and maybe build out positions in these companies. Most importantly, I would say, is have your base secured. You want to have a strong base in your portfolio of one or two or a combination of index funds like this. So the QQQ down 2.9%, already up in the pre-market to 517. But as you can see, likewise, it's down 530, 517. Still, we're still talking all-time highs. It's only been a month or two up in these numbers. Of course, it could dip down lower. That's always a possibility with the market, that you could see reversion to anything in the 400s. These are all possible because you have the moving day averages. So I'll highlight here real quick. You have this one, and this one. So it's possible that index funds can drop back down at any time. The market is a wicked scared child. The VIX has dropped. It was pretty high yesterday, of course, because of the fear, but the fear index, the volatility index, sorry, is lower here again. And then NVIDIA is the other one I love a lot. So good opportunity here to buy in cheaper, of course. These were good opportunities to buy the dips. It's back up to 553. So again, looks like the fear is already over. It looks like the market is no longer really worried about this DeepSeek R1 problem that we were experiencing. And then I'll finish up just 1 or 2 minutes here on economic calendar. We have a lot of data coming today, as you can see. It's going to be a big day for American indications, economic data. I'll be looking at most of it throughout the day. I want to see growth in all categories, but I'm most interested in the housing price index, I think, for me personally. And then further down here, I want to see what the Dallas Fed index has to say too. And then money supply. Those are things I'll be keeping a close eye on. And if you follow me on X, I'll be tweeting that too. And then over here, the last thing we want to highlight is just the fear and greed index. And it's ran away on me. Where did you go? There it is. Can you get up there? Thank you. So we're back into the 40s. We were kind of neutral for a kind of a minute, I think it was. Just note, last year we were in extreme greed. This is how the market moves. You want to keep an eye on this thing. See, where are you with the overall sentiment of the market? And we're in that little bit of a fear area, but I think we're pretty neutral. I don't think it's huge problems, huge worries here. So again, thank you, appreciate it. Please drop a like, smash the button, do all the things.